to get the rate cuts we have to go much higher. First, let's set the stage. As everyone knows by now, the Fed needs to start cutting interest rates before the economy deteriorates to the point where they need to scramble the jets to save the day. But they can't move if the economy is doing fine and the aggregate retail sales data is inconclusive. So we're always trying to extrapolate from individual retailers, and taken together, they seem to be saying that the consumer is fickle and perhaps in some cases tapped out.
Couple of years now, and it's exciting times for the gold mining industry, but it's also a measure, as you know, gold measures a risk, and definitely the world is facing a lot of risks, and that's what the gold price is measuring. The first one being just the de-dollarization from central banks, which we saw drive the physical gold. And actually we got a softening in the ETFs and also the equities. And recently we've seen the ETF inflow start again a little bit. And certainly the equities are attracting attention now, so all round. And I think, Carl, the big issue is if you look at the global economy, it's not in good shape. And the best measure recently is the weakening iron ore prices. China's economy is different today than it was a year ago. Everyone's focused on the US elections, but what gold's telling you is it's not all good out there, right?
It's the precursor to the Fed central banking meetings. Why here? Figured if the Fed was having an annual central banking conference, it might be a fun idea to put on a decentral banking conference somewhere in the same area. And obviously this is a beautiful resort, and since we're in crypto, we're a little bit more bougie than the Fed. And so this is like Lux here at the Four Seasons. I understand at the resort that they're at, it's a little more rustic. Is the strong libertarian bent to their legislator and to the governor, Governor Gordon. I think they've done a very good job of understanding that this can be a laboratory for the rest of the country. And so if they get that legislation passed here and they're using that rail system inside the state, hopefully we can export that to the other 49 states. There are many reasons to be here. The Fed is here, so we want to be a decentralized version of that centralized conference. But secondarily and equally important is the state. The state is very pro-crypto. It's very pro-regulatory friendly. And in many ways, I think they're, from an intellectual perspective, they're going to lead the United States to the right place.
Welcome to the Cryptoteacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And guys, make sure you go to TikTok, like, and follow. And we have Jim Cramer on the consumer. Yes, the consumer is breaking right along with the global economy. How do we know that? Because we can look at the price of gold. And who's buying the gold? That's right, the central banks, the money printers. They printed 80% of all money in existence in 2 years. They've already destroyed all the fiat, and they're in the back of the curtain buying up all the gold and moving us over to this new digital economy. That's the reason why Bitcoin is sitting so high. They know all about the new economy, like Obama stated. And we have Scaramucci in Wyoming. Yes, Wyoming is going to be the testing ground for these digital assets. The same way when we look at all this technology, majority of it is being tested over in the West, places like California. We know for a fact this technology is working because it's all over in the emerging market. But in the U.S., it's now time for them to roll out that plan and implement it. But remember, guys, we need that crisis in order for them to bring in the machines right along with crypto. And that's the reason why we hear the drums are beating. But remember, the banks fund both sides. And like I stated, this global economy is blowing up. But remember, guys, this is the legacy economy that has to be destroyed. And small businesses are the backbone of America, and we see them clearly collapsing. And when it comes to these small and medium-sized banks, we know crypto is going to be used as the scapegoat for their collapse. So the small and medium-sized banks are going to collapse, but we know that's part of Basel III, the capital requirements. And then we have the small and medium-sized businesses And then, of course, we're going to have a spike in unemployment. It'll be well past 5%. And remember, the crypto teacher told you, because he knows all about the fourth industrial revolution, where the robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
From the Fed minutes, we're seeing that for the Fed governors, they saw that inflation was eased over the last year, but it remained elevated. All of them supported maintaining the current target range, but there was some support for a quarter-point cut in that July meeting and increased confidence that inflation was going towards that 2% goal, but they needed greater confidence before reducing that rate. Of course, jobs numbers, a huge interest today, and the Fed did say that the labor market was in a better place, but there were concerns that payroll was overstated. They said the monthly pace of payroll, they moderated from the first quarter, and it was solid in recent months, but they did say that there were increased risks to employment. Of course, that comes as you're seeing decreased risks to inflation, although they said in their minutes that inflation pressures might persist for some time. But overall, there was a sense from the Fed that there was a better balance for inflation and employment objectives, and some said they were more or less balanced in that July meeting. They also took a look at consumer spending, and they found that lower and moderate households had rising credit card delinquency rates. They noted that consumers were shifting away from discretionary spending and buying lower cost food items and brands. So certainly setting up a lot there in those meeting minutes. You can kind of see some of that confidence emerging on inflation. Certainly will be very interesting to hear from Powell this Friday.
It looks to you like we're being fooled about how strong the economy is, or is it's pretty good? It's a soft landing.
Yeah, look, I see a lot of warning signs out there. The credit card and auto loan delinquency is up quite a bit. We see something in the JOLTS data, for example. The hiring rate is substantially below the rate it was before the pandemic, about half a percentage point. If you look at the kind of anecdote data from big companies that sell to especially lower income consumers, they're definitely seeing kind of price sensitivity in a way they didn't this time a year ago. Now, does that turn into a recession? Not necessarily, but it does tell you that something is cracking a little bit in the economy, and the Fed, if they don't start moving, will definitely be behind the curve if that happens.
All right. What would the unemployment rate, what is it, 4.2 now? Or I don't know. Where would that have to be for you to say, okay, we have a problem? Like 5%?
For me, it's not the rate in isolation. It's the direction of travel, and that's what's alarming. You mentioned the SOM rule. The unemployment rate, unemployment rate was 3.7 back in January. It's now 4.3. That's a pretty big move over the course of 7 months. If it stabilizes in the mid-4s, that's great. That's still a quite low unemployment rate. Nothing wrong with a 4.5% unemployment rate. Right. But if it keeps marching up, and that's what the SOM rule is about, that when it starts moving up, it tends to not level off, and that's what's worrying. So, yeah, if we level off at 4.3, 4.5, no problem. If we end up going past 5, then you're in a situation where you probably are in a recession, and it's hard to stop.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology, and I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust. And we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. with triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books, is time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York. From COVID 33. Part 3. Joshua, and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.